This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this StockBox interview.
Well, welcome back, of course, to Research Talks here from StockBox with Alan Green and Dan Flynn. So welcome back to you both for the second week where it's this new format. How are we doing? How are we doing, Dan, first of all?
Yeah, it's been a fairly decent week in the global markets, hasn't it? So the S&P hit another record high yesterday, despite the Fed sounding some alarm bells and Trump's tariffs casting all sorts of uncertainties around the future. So it suggests that there's some bullish sentiment there breaking through and remaining in place, which is good for us as equity investors, isn't it?
Well, yeah, of course it's good for us. Yes, it is. I did see that as well. Yeah, another all-time high in the S&P, and of course, yet another all-time high for gold this morning, 2953.8 as we speak. I think you wake up every day and it's like someone said to me, well, I think it was Paul Johnson said to me a while ago, back in the tech days, and I was too young to be investing. Probably you were as well, but Alan probably was investing back then. And we wake up every day knowing you were richer. It was just a question of by how much. And it's the same with gold, actually, because I hold physical gold. I think I've got a couple of gold stocks as well. So like every day you're like, ooh, I'm a bit richer today.
Yeah. Likewise, I held some gold, and you look at the balance every day; it's gone up by a little bit.
It's only a little bit. You need a lot, but it's good, isn't it? Yeah, and that's in your pocket. Yeah. So
remind me, what was your gold price prediction?
Yeah, so by the SMI's date on the 17th of March, mine was 29.75. Yours was 29.50, wasn't it? And Alan was 29.95. I think
29.95,
29.95, yeah. Ryan Mee gave me a prediction yesterday on the live stream as well. What did he say? He said 30.25.
Oh, okay.
So there's a few. We're all in a similar area, aren't we? We should probably have a bit of a wager between us, because I don't think the SMI is actually betting. It's just a bit of fun, but maybe we should. I don't know. I don't want to put money on it, but put a beer on it, maybe.
yeah, definitely, yes. Well, we can preempt that later today, perhaps, Dan. But there we go.
Yeah.
You two going into the city. Okay, and Alan, how have you been? How's the week been for you?
Yeah, it's been another busy week here, Mark. Certainly, the markets have provided plenty of entertainment and lots of ups and downs. But of particular interest, I was watching BBC News last night, and of course, Ukraine is front and center at the moment, and the negotiations that have gone ahead without Zelensky. But there was an article on BBC News where they referred to benchmark mineral intelligence, BMI, looking at Ukraine's mineral resources. Ukraine supplies 5% of the world's mineral resources. It has 22 out of 34 critical minerals that are, of course, on the EU Critical Minerals Directive. And it also has swathes of rare earth deposits as well across the country. And these are all marked up nicely on a map on the screen. And of course, you're aware that there are, like any state across that continent, that there are mineral resources dotted here and there. But I think that really brought the whole drive and rationale behind the war into focus. Of course, Europe would be happy to welcome Ukraine as a member of NATO and bring it into the fold, or bring it in as a member of Europe. For that reason, Putin, of course, wants to get his hand on the mineral resources. Never mind the aspirations to wind back the clock to the days of Imperial Russia. He just wants the mineral resources. Trump sees the same opportunity and wants to come deal with Putin. Never mind Zelensky. So that puts a different complexion on the reasons behind the war. But just an interesting piece.
Yeah, interesting. And it's often about commodities, isn't it? If it's not, it used to be oil, didn't it? Now maybe it's,
it was oil.
Yeah. maybe it's commodities that the West definitely needs. Well, the world needs, not just the West. But yeah, no,
Definitely.
interesting. Yeah.
So Trump's of course tried his hand at Greenland. He's been rebuffed smartly there, and so now he wants to cut a deal with Putin and split the proceeds across the Ukraine.
Well, yeah. Well, it's interesting time. I did say that. I said, Trump will at least make things interesting, will change things up a bit. It's definitely started off. Yeah, indeed. Okay. Well, anyway, we're going to cover a few different companies today again. So we're going to start with gmet. That's, of course, Guardian Metal Resources. Caught up with Oliver Friesen. We've got an interview clip to play in a moment here. He was out on site. And then he's at Mines and Money Miami. So lucky him. I know he's got a busy packed schedule. So he's probably not out enjoying the Florida weather. But he is at Mines and Money with, I think he said he had 20 plus meetings, and he said he was quite off record. He said to me he was really impressed with who they were with. They were with family offices, large investment funds, as well as high net worth investors. So he said the caliber is actually the best he's seen at some of these shows, and he's really looking forward to having those meetings. So I'm sure I'll be catching up with him after this show to see exactly how it went. But Alan, as usual, bring us up to speed on gmet to start us off, if you can.
Well, of course, Guardian Metal Resources initially spun out of Power Metal Resources. The Power Metal Resources stable as Golden Metal Resources has literally metaphorically blazed a trail over the past year. Just looking at the price chart, shares traded as low as 12.5p. This is going back to March last year. They subsequently hit a high of 39p on the year, and they're just building back up to that level again now. I see the shares up this morning up to nearly 35p again. So the company has just continued to deliver, and Oliver Friesen, as a young chief exec, has absolutely done a mercurial job on bringing the company forward. And of course, the company has a portfolio of assets in Nevada. From a logistical standpoint, it's the assets are grouped close together, so it makes running that business and managing those assets very easy. And also, for investors and some of the institutional investors that you mentioned there, Mark, they want to visit the project. They can get around most of the projects, I would say, within a day or a couple of days. So that's obviously hugely important. And also, on the back of this new drive by Trump, of course, we mentioned Trump, unleash American energy. Guardian Metal Resources see themselves playing a significant role in that process. So the flagship project for the company is the Pilot Mountain project, and of course this is a long-established asset which has a JORC mineral resource of 12.5 million tons of tungsten, but the project has been developed since that time as a multi metal project, and has many other assets in the ground. And indeed, they've through work at to the prospects within the project area, they've identified new opportunities at the composite bulk sample of industrial garnet that was taken out of the ground. The SGS Canada undertook a study on that composite bulk sample. They recorded 58.3% garnet, and of course, industrial garnet has a multitude of applications in industry, and 0.737% scheelite by mass. And Oliver said, that result in itself far exceeded initial company expectations for the garnet that could of course be produced. Then of course this month we've had an update on the Porphyry South prospect, which is prospective for copper and molybdenum, all within the mineralized hydrothermal breccia zone, and the numbers from that make very strong reading indeed, and it shows that the mineralization is consistent at depth and across a a large area. And all of this is just confirming the project's credentials as a large-scale multi-metal project. So they can extract tungsten, of course, but they have the opportunity to mine for copper, and of course, then there's the industrial garnet, which has applications on so many levels. So this is really falling very much into a category as an important resource for US industry, and it's something that will fit right in with Trump's drive going forward. So already this year we've seen you mentioned, of course, Mines and Money Miami, and with the institutional investments and family offices going there. But of course, in January, further institutional interest, they raised another 750,000 at 0.30p through the Premier Miton Fund, of course, run by Gervais Williams. And this, of course, it just really underscores and puts a floor in the share price, I think, for investors looking for an opportunity to get in. And of course, you always want to buy in on a dip with a company like this, but if you look at that chart, it's only going one way as far as I can see. We've seen a series of higher lows since the start of this year. End of December, we were at 28p. Then we've seen a series of highs since then, but every time it's dropped a little bit higher than the last time. So that's a very bullish charting signal, I think, for anyone who's into their charts. But the company is at a very exciting juncture, and I think the very fact that Power Metal still retain such a significant holding in the company, they see so much potential going forward, and great opportunities for growth in the coming weeks and months.
Yeah, no, I agree, and I did see some. I think it was perhaps some comments about Power shouldn't be selling out because the gmet's just getting started. But when your investment is up, what was it, like 900% or something?
Yeah.
Then, I think you definitely should take some off the table. And they've still left exposure there for future upside if indeed the journey is just getting started. But how many times have we seen a share rally up and everyone gets really excited only to see it come back down for whatever reason, not necessarily because of a failure in the project. It could just be it could be any reason as to why that then comes off. So I think Power doing the right thing, Chris. That was the whole point of the Power Metals model, was to take that to crystallize and use that money to reinvest in projects. So we're not talking about Power Metals today, but they're going to have a lot of money landing, obviously, which then should hopefully propel them forwards. But certainly on gmet, I mean, Oliver Friesen said there's almost a never-ending list of drill targets, and I just think it's fantastic that it continues to drill basically every time. It's just a continuous process. It's not like it's a start-stop where you have a campaign and it starts and it stops and you wait weeks for assays, then it gets time to analyze, and then you have to plan in another program. This is just ongoing, and it's really nice to see that.
Well, it is, and also, Mark, I just discussed the Pilot Mountain project today. We've of course got the Garfield project, Golconda, Stonewall, Kibby Basin Lithium, and in Garfield alone, they also recorded some discovered a high-grade antimony gold area at the Pamlico Zone, which is in the south of the Garfield project area. So as you say, there's a multitude of drill targets to go at, but all of these projects are grouped together. So, from a logistical standpoint, managing the assets is very easy for the company.
Yeah.
Indeed.
Is there any indication on when the company might know about whether it's going to receive any grant funding? Because obviously the project developments would stand to add value, but that could be a real game changer if it receives a massive amount of funding, couldn't it?
Yeah, well, certainly, I say negotiations. I mean, liaison with the US government is ongoing. They appointed a Mrs. Chango Turkmani well over a year ago now to work with the US government and look at those opportunities. But I think Guardian will have so many opportunities to raise money, to raise grant funding. And I mean, we've seen with companies like Blencow Resources, for instance, so you have the graphite asset in Uganda, the USDFC Development Finance Corporation lent or provided $5 million worth of funding in tranches of $1 million each to that project in Uganda. So USDFC is available, and there are so many funding corridors the company can go down, and I'm sure that process is well underway and well advanced now. But certainly there's no shortage of institutional interest, as we've seen already with Premiermite in this country, and I'm sure with some US institutions as well.
Yeah, absolutely.
Well, I didn't actually know Premiermite had got involved with gmet. I'm seeing them more and more now, and that is interesting. I'll have to ask Gervais to what his rationale was, because I know his main MO is companies pre-cash going to cash, and obviously gmet there's still a little bit away, I would say, from cash flow, but maybe he really sees the opportunity there. Or maybe he's got a hotline to the White House and knows that the funding is. I don't know, but that's nice to see that. Yeah, I mean, as I've said before, and I think we've said before, Alan, the smart players are positioning, aren't they, now in this space?
Well, they are.
Now, follow the money, that mantra.
Yeah, follow the money, but also the fact that Premiermite invested 750,000, and they're already investors too, so they've increased their stake, invested a further 750k at 0.30p. So that puts a floor there straight away. Although the way the share price has responded this year, you just look at the chart since the start of the year, it's just building. So I think we're going to see a value inflection point at some point in the not too distant future. But it's a very exciting opportunity, I think, for investors, and I think there's great potential for the company to multi-bag from this point.
Indeed. Well, let me just play this from Oliver to finish us off. That was from an interview earlier in the week.
Every time we talk, I always sort of ask you the same question. The drilling continues at Pilot Mountain, and again, it's just continuing on. So this site visit was really tied into Mines and Money here, but it's almost like a check everything's going on, all the team coming together, and almost like a recce as well, really help you think ahead at Pilot Mountain.
Yeah, I mean, it was really the main reason was to get the engineers on site. And to walk the ground with them. We're at the point now where we're looking at where key bits of infrastructure are going to go for the PFS. You look at the tailings impoundment and the mill site, where's that all going to sit? So it's really important actually just to walk the ground. And even on site, we were looking at areas and going, that's actually not going to work, which was what was outlined or thought of previously. That area is actually going to be a lot better, and your costs are going to go down accordingly. So really, really impactful. We're doing things real time, looking at moving things around, but more, also looking at the core, and then also getting eyes on the breccia zone. It was the first time I've seen it in person, to see those rocks and actually walk the ground was really impactful. And that's an absolutely outstanding drill target that we want to get to. As you mentioned, we're drilling right now. That is for the resource upgrade and for the PFS. But we want to go and drill. We permitted holes at Garnet now, so we went to Garnet and walked around there, and there's some fantastic outcrops there at the Garnet zone. Gunmetal's an area we want to eventually drill as well, and then the Porphyry South zone. So I think that really highlights the quality of this asset. There's a lot of assets that I know of that we don't own, but I'd be hard pressed to find a few good drill targets there to go after. But there's a long list, that almost never-ending list of areas that I'd love to drill if I could at Pilot Mountain, which is obviously a good problem to have at the end of the day.
Well, yeah, very good problem, isn't it? You should, as you say, just continue to keep drilling and drilling away there, proving out that resource. And then, of course, we didn't really talk so much about Ten Paiute, but there's the opportunity there. And again, Oliver in the interview said that the engineers were just walking around getting really excited about, it'll cost you this to replace that and that to replace this. And I think there could be some scope a lot of scope at Ten Paiute as well. So it just continues, doesn't it, as it does, and heading towards that resource and the initial study that will be done, and then you really get the first bite of what the economics look like.
And of course, they've just signed that agreement to acquire Tempo-8, haven't they, Mark? Former Emerson mine, which used to produce its prospective as tungsten, silver, and zinc, was and it was operated by United Carbide between 1977 and 1987. So that's again, I think you can look into the future and say, well, where are the value inflection points going to come? That they're literally, there's a multitude of potential areas that could provide that trigger point to drive the share price higher. So it's a really exciting point.
Yeah, indeed. Well, thank you very much, guys, for having that conversation about gmet. I think it'd be a good year for them. Certainly a pivotal year anyway.
Yeah.
So, Dan, do you want to talk to us about something a bit different? Sealand, who, I don't know much about them really, but the share price has been very active.
Yeah, exactly. I just wanted to cover Sealand Capital Galaxy, ticker SCGL this week, because I know you're speaking to them soon, Mark. I think that's the plan, right?
I think the plan is maybe next week to have a chat with them, yes.
Excellent. Yeah. So, like you say, this stock won't stop rising at the moment, even after coming off its insane highs of 11.9p at the end of January. It's still up nearly 2,500% over the past year, and up 116% year to date, with a share price of 3.4 pence and a 29 million market cap. So what's going on, I think, is the question. And as is often the case at the moment, the key behind the momentum is AI. So Sealand announced a significant investment in a company called hVIVO AI last November. Pam from StockBox spoke to Michael Callas, the founder of hVIVO, a few weeks back, and he explained that the company uses AI learning models to analyze market trends and consumer behaviors in the luxury goods sector. These insights are then used to match brands with consumers on its platform called Olive. And the net effect is to offer consumers a superior personalized shopping experience on the one hand, and increase revenues for partner brands, both established ones and up and coming ones, on the other, by putting their products in front of the people that want them. So I guess it's a bit like when you start seeing adverts for takeaways on your phone after you've been talking about how hungry you are, but for Gucci handbags and other such goods. So it was shortly after this partnership was announced that Sealand's share price started to skyrocket. Since then, the company's appointed a new CEO in Dr. Thomas Sawyer, who's a leader in commercializing high potential technologies like those in the emerging AI space. And perhaps most notably, it's launched a platform called hVIVO AI Asia. So this gives Sealand's existing subsidiary, SCG Group, access and exclusive distribution rights to Olive, hVIVO's platform in the APAC region, the Asia Pacific region. So it builds on SCG's long-standing focus on partnering with growing consumer brands seeking access to Asia Pacific. And Sealand's goal is to use hVIVO's existing infrastructure to grow and scale in APAC and raise its competitive profile. So SCG will lead the financing of the commercialization and build out of hVIVO, which it expects to cost an initial $1 million. And in return, it will enjoy the majority of any future earnings generated from its activity there. So I guess the question from here is whether Sealand can continue to move upwards at the rate it has been doing. I think, if nothing else, the scale of its rise so far is indicative of the enthusiasm among investors to get exposure to AI. And we've seen this with a few stocks, Mark, we've discussed a few in the past. What seems to have generated particular interest in Sealand is the way it's approaching AI, I think. As the company's CEO said in the last update, there is a risk of oversaturation in the AI space. Entrants that can't bring something unique really do risk dying out over time. So hVIVO and Sealand's use of AI in the APAC luxury goods market, I think, stands out because it's so unique and valuable. The APAC luxury goods market is the largest in the world. It's worth $142 billion today. It's expected to be worth $262 billion by 2029. So if Sealand can demonstrate that it's establishing itself as a leading player in this rapidly growing space using AI, I don't see why its valuation can't continue to rise from there. So when you speak to the company market, it'd be really interesting, I think, to learn more about their plans for rolling out hVIVO, how big this opportunity is in their eyes, and what sort of timescale we're looking at to revenue generation.
Okay, good. Okay, well, I'll certainly put those questions to the company when we speak. But I mean, you're right in terms of certainly things like timescales for revenues, because at the moment it's almost like a concept, I suppose, isn't it? That's yet to perhaps see tangible metrics as to how it can make money. But we've got at least the concept there, shopping experience in the APAC region using AI there. But to get a bit more clarity or in-depth information on how that actually works, a business model, would be key, really. Do you think it's rising on AI hype, or is there something else behind it, do you think, that's causing the sort of the volatility there in the share price?
Well, I think, like I was saying, there's lots of AI stocks out there, but this one seems to have that unique focus on that specific large market, and perhaps that stands out as a way of, like you said, a way of actually monetizing AI. Like you say, it makes sense on paper, putting AI into this huge market. I think that's obviously generated some interest, and I think from here it will be about putting that model into practice and actually starting to turn this opportunity into a reality.
Yeah, good.
I think
I look forward. Go on, Alan. Sorry. Yeah.
Yeah, I was going to say, Dan, I think what's interesting here, and I think that, where they're going to see the drivers come from. Of course, the platform Olive uses influencer, what they call influencer curated boutiques. So of course, we all see just how important and influential these influencers, in inverted commas, are, and that's probably even more so across the APAC region. So it'll be interesting to hear about their plans to integrate the AI mechanism, if you like, with influencer created boutiques. That's obviously how they see developing it.
It certainly seems like the obvious way to accelerate your growth, doesn't it? Getting influence on board.
Yeah, indeed. Okay, excellent. Thank you, Dan, for that. So, Alan, do you want to talk to us about Sovereign then? Of course, they had some really decent news recently, and the share price finally, although it's not moved up very much, it did move up a little bit, didn't it?
Well, it did, yeah, and it's just gradually building, and Sovereign it's a very exciting stock to own. Actually, I do hold stock in Sovereign, but if you look at the performance over the past year, I mean, it's just top right angle and stuff all the way, series of higher lows again, but it's just been consistent across the year. So we've gone from a 22p low in February last year to 41, 42p today. So that's indicative of where the company is now. But what really changed everything for Sovereign was the involvement of Rio Tinto. Of course, Rio Tinto have invested nearly $60 million in total, and they now hold just under 20% of the company. And this has been a huge driver for Sovereign. The Cassia project, of course, is it's the largest rutile project in the world, 1.8 billion tons of rutile and 24.4 million tons of graphite. The company issued an optimized PFS, and this PFS was undertaken under the guidance of Rio Tinto. So the Rio team and Sovereign team worked together on producing this. NPV pre-tax of $2.3 billion, total revenue of $16.5 billion, operating costs $423 per ton, which is the lowest cost in the world for production of rutile, and an IRR, internal rate of return of pre-tax of 27%, with annual EBITDA generated of $409 million. And the company's gone. It's done the hard yard, if you like. It's gone through the process of building a pilot plant, and of course, it's dug this enormous pit, mined everything out, tested everything, and then it's replaced the earth back into the pit and returned the land to its original condition. They're also doing a lot of community work, as you'd expect. They're working with farmers to improve the yield of their maize crops. The infrastructure, of course, is massively improved: water, health, electricity, education, everything provided for the community there. And it's had strong support from the Malawi government and President Chakwera, who addressed the UN a couple of years ago and eulogized about the potential on offer by CASIA. So to bring it up to date, the company announced yesterday that the company that it was able now to tap into a second market. Of course, the graphite market, or the market for graphite, is huge. Primarily batteries, which takes up 52% of total graphite supplies across the world. But CASIA graphite now meets and exceeds critical characteristics for refractories, and this is, of course, optics. And refractories market is the second largest end user of natural graphite. Represents it takes 24% of the total graphite supply across the world. So now the graphite's been approved for use in that marketplace. It opens up additional supply potential for the company. And overnight, we have had a note out from SCP Equity Research. SCP said that the graphite refractory tests are excellent, shows it's got all the key characteristics: large flake size, low volatiles, impurities, low spring back. In other words, it won't expand and contract for use in the refractories market. It maintains its buy rating and $1.65 share price target. That equates to 83p. So we're currently less than half of that at 42p. Well, we're just about half of that at 42p. So I think that chart, if you look at the chart for the year for Sovereign, I think we're going to see the share price continue to march north. And indeed, some pundits, some Australian investment banks have written about Sovereign, saying it's going to be the next Fortescue Metals, and it's going to multi-bag from this point, which might be a little ambitious, but it's certainly only going to go one way as far as I can see.
Good, excellent. Thank you, Alan. It's good to see them, of course, just continuing to make waves there. So yeah, at least a doubling of the upside potentially there, considering that research note that was out. So that put them at just under $500 million, wouldn't it? I think market cap.
Indeed.
Yeah.
Well, yeah. They're just under $500 million Australian. So that's about 280,000-300,000 sterling.
Yeah.
Mm.
Okay, well, thank you, Alan. Felt good to see Sovereign, of course, continuing to just press on and build what they've got there. So Dan will talk about another miner, Katoro Gold. A lot smaller market cap, but potentially, of course, much more attractive risk-reward ratio.
Yeah, absolutely, Mark. So Katoro has been around for a while, but I think it's really worth highlighting in the face of its recent progress. So long story short, the company's undergone something of a hard reboot in recent times after a sustained period of decline. It started at the beginning of last year when the company raised $825K. The money was used in part to settle historic creditor balances and liabilities, but it's also been used as the foundation for a business recovery plan. And this has been advancing ever since. So Katoro has disposed of some of its legacy assets. It's completing a technical review of its existing Haneti project in Tanzania, which is held in JV with Power Metal Resources. So another mention for them. And it's broadened its focus beyond Africa to also include opportunities in North America and Australia. So a key point was last year, the hiring of Patrick Cullen as Katoro's new CEO, who you've now spoken to a couple of times, Mark. Patrick's using his experience at the helm of various AIM, TSX and ASX listed explorers such as Tertiary Minerals and Arkle Resources to drive Katoro forward. And recently, it seems like his efforts are really starting to bear some fruit. So back in August, Katoro announced that it was staking the White Pine project in Ontario, Canada, where data suggests the possibility for a significant uranium discovery. The company quickly began fieldwork informed by massive amounts of historical and open source data. And as of its last update, initial geological observations were looking pretty encouraging. Perhaps even bigger opportunity, this month has seen Katoro acquire a fellow explorer called 31 Explore. The acquisition is being completed entirely in warrants, which means no upfront cash drain or dilution. And it's given Katoro control of a portfolio of claims near White Pine that are in Ontario that are prospective for both lithium-bearing pegmatites and rare earth elements. So chief among these is the Pearl project, which includes multiple mapped but untested pegmatites. And as you discussed in your interview with Patrick this week, Mark, since the deal was first announced, Pearl has been significantly expanded after new interpretation and mapping emphasized the anomalous lithium and pegmatite potential. So, long story short, with many other operators active in the area, 31 explorers shoring up the ground before others have an opportunity to grab it. So the reason I'm discussing Katoro today is because I feel it presents a clear first mover opportunity to investors. As of writing, the company has a market cap of less than £1 million. Earlier this month, alongside its acquisition of 31 Explore, the company raised £317,500. And aside from this sum making up nearly half of its tiny market cap, it gives Katoro the necessary resources to advance exploration across all of its new licenses in Ontario, perhaps even some new licenses as well. Should this exploration uncover something particularly exciting, then we could quickly see Katoro's profile grow. And as we all know, with a company this small, all it takes is a small amount of buying to really move the needle. So the stock's definitely on my watch list, and I'll be really interested to see where it goes with its next few updates.
Thank you, Dan. Yes, I'm looking forward indeed to seeing what happens at Katoro. It's definitely sort of a turning over of a new leaf, a bit of a fresh start, and that's always nice to have a look at that when a company is not valued very high, but is just sort of turning around, if you like, with a new board and new projects there. And as you say, I spoke to Patrick, and the focus, of course, is it's really energy metals. You've got the uranium, and then of course you've got lithium and the rare earth there. And I think he managed to tie up that ground for relatively cheap price, and basically go and do a bit of exploration, see what's there effectively, and hopefully it turns up something. But yeah, a bit of a turnaround story with Katoro, so that's good to see. So Alan, are you okay to finish us off with, I think it's hVIVO?
hVIVO, yes. Sorry about that. Some little audio problems crept in then, but all's good now. So hVIVO, for investors with longer memories, you'll remember this company initially traded as Open Orphan, changed its name in 2022. hVIVO is a contract research organization. Really came to prominence during COVID, where the company had a number of research centers, quarantine facilities in London, and also now similar facilities in Germany, in Mannheim and Kiel, and also a laboratory called a flu camp, where volunteers will go and they'll be given a mild dose of the virus, and then they'll be studied and treated, and the cure is developed from there. So it's contract research, but of course it provides these facilities to 7 out of 10 of the world's largest drug and pharmaceutical companies, and it's delivered tremendous success along the way. The company, of course, is chaired by none other than Carl Friel. We talked about Carl Friel's involvement last week with European Green Transition. The chief executive is Yamin or Mo Khan, who has over 25 years experience in clinical research and contract research industry. And The team also bought in a year or so ago some key members of Amrit Pharmaceuticals, which was a company that Carl was also involved in, which was sold for an awful lot of money and listed on NASDAQ for an awful lot of money a few years back. So there's a track record of success with the group, a track record of great numbers. And if you look back at the news flow from the company across the past year, you'll just see contract win after contract win, new clients coming in, new clients taking up the team to provide research for a particular drug trial or a clinical trial that it's undertaking. And good numbers too. The company has really built its revenue stream nicely. It's currently got a market capitalization of 121 million. It has been higher, so the share price is just off year lows at 17.75p. Has traded as high as 32p on the year, as low as 16.5p. But the numbers for last year were very strong. Revenues up 11.9% to 62.7 million. EBITDA margin of now at 26%. It was 23.3% previously, and also cash of 44 million in the group as well, up from 37 million the previous year. So with this cash war chest, the company has been making acquisitions and also looking at joint ventures to develop and build the group forward. But the management team are top notch and led by Carl. I think this low point in the group's valuation does provide a great opportunity for investors to get in at this point. The company also pays a small dividend too, 1.1%. So you can actually acquire the stock at these year low levels and also receive a dividend in the process too. But a very bright future, and also they're very high profile in media as well. They were featured on BBC and Sky News regularly, and you regularly see articles on research. Normally, you see Dr. Andrew Catchpole, one of the board, talking to the cameras, but they have a very strong media presence and they're very high profile across the industry. So a great opportunity, I think, to see further value from this point going forward through into 2025.
Excellent. Well, good stuff. Thank you, Alan. Thank you very much for that. So that covers quite a few companies there. So let's see indeed what next week brings. See if gold continues to make us a little bit wealthier throughout the course of next week. And thank you both for your time.
Thanks, Mark.
Thank you, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.